Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Today was a very interesting day. Started off with pretty negative trade today, but then a tweet from this man turned it all around. But first, we're going to get into that. But first, let's get into what happened in the markets today overall. We saw canola up $2 a ton at 607.20. Minneapolis wheat was down to 557. Kansas wheat was down 2.25 at 495 and a half. Chicago wheat up 1.25 at 509 and a quarter. Soybeans up 11 and a quarter today. Turned it around, and ended up at 1013. Corn was up 1 at 416 and a half after heavy losses yesterday. Soybean oil was up 93 points at 50.42 or 50.4 cents per pound. Canadian dollar was off about 8 points today. Live cattle, feeder cattle both down today. 234.50 for live and 357.60 for feeder cattle. All right, let's get into the meat and potatoes here. A big, I don't know, do you call this a tweet? A big post by U.S. President Donald Trump. I'll read it out here to you here. The soybean farmers of our country are being hurt because China is, for negotiating reasons only, not buying soybeans. We've made so much money on tariffs that we're going to take a small portion of that money and help our farmers. I will never let our farmers down. Blah, blah, blah about Sleepy Joe. I love our patriots, and every farmer is exactly that. I'll be meeting with President Yi of China in 4 weeks, and soybeans will be a major topic of discussion. And then in caps, make soybeans and other row crops great again. That he sure did today. Here is the soybean chart at the end of the day. You can see there was a very wide trade range that brought soybeans right up to 1020, where they settled at 1013. But as you can see, this is a very nice little outside day candle pattern here, which means that today's candle pattern fully engulfed the previous day's trading pattern and finished up in a bullish situation or in a higher situation. This would be considered a classic chart formation here, classic engulfment chart formation. This would be a bearish turnaround or a bullish turnaround signal. Not that that means that this is guaranteed or anything, but this would be a good sign from a technical standpoint. If you were a technician, it may stave off a test down back into this 980 range, which it looked like that's where it was headed earlier this morning as it broke, a bunch of these support levels here, and even broke the support level here after the USDA report yesterday. So yesterday and even this morning, soybeans looked very bullish, but then the post by President Trump wiped that out. As you can see here as well, here is when the post came out and was being digested. Pardon my drawing here. Was being digested by the market. Lots of volume even later in the session as well, and overall a pretty good day today, and that just kind of showcases the effect that political commentary can have on these markets at this time. If you're not a subscriber to our premium reports, you might want to do so now by going to CanadianAgMarkets.com/subscribe to get access to all of our insights. It's only 99 bucks a month. This last week, we published a special on the Canadian dollar and its effect on grain prices. We also talked about canola and biofuel and the state of the Canadian biofuel sector. So if you want to check that out, subscribe today. I'll send you that report. You'll get all of our reports going forward, including our morning commentary, our ad hoc commentary, our weekly report, as well as these videos sent to your inbox every day. Also, if you haven't subscribed to this YouTube channel, do so by clicking subscribe as well. As you can see, about 75% of the folks who watch this are not subscribed yet. So get on that. Click that subscribe button. It'll make me happy today. All right, let's get into some of the other markets. I'm going to talk a little bit here about how this all affected canola today. So here's December soybean oil. As you can see, we saw a pretty nice day in soybean oil as well. It's been kind of hanging down here by this support level right around 49 cents, has traded below 50 cents for a number of sessions here. Today, it popped up to this 20-day moving average. I would like to see it move above that. Today's candle was pretty good, pretty much engulfed most of the trade over the last week or so. I do think that's positive. I think if we can see some, I think this was largely related to the soybean gains that we saw today as well. So if we see some follow through on beans, we might see some follow through on the oil as well. Let's look at canola here because it staved off a bit of a move to the downside as far as breaking support. Now, we saw this market break support on Monday. Canola did not trade yesterday, so it didn't have an opportunity to react to the USDA report on the day that it was released. So all of that reaction came this morning. We were seeing some, very low values through the early stages of the trade, like before the open. We saw a little bit of gains as the open commenced. And then after the soybean news, we saw this actually move into a positive situation. So again, we gained $2 today in canola. As you can see, that doesn't make a huge difference in the chart formation. But if we do see some follow through on the bean side, I think that'll continue to help canola. I can't necessarily call a bottom here by any stretch of the imagination. We are still seeing lots of pressures from the Canadian marketplace. We'll get into some of those right now. Here's the cumulative exports. This is CGC exports at this time. We have out to week 7, and the exports aren't looking so great at this point in time. And or they're kind of trending right along the 5-year average, but we're definitely behind last year. And not that we weren't expecting that. We are expecting a decrease in exports from last year, but that was largely because of an increase in crush. Although that is even coming into question as some of these crush plants under construction are seeing delays and things like that as well. Just to kind of give you an update on harvest, because with canola, a lot of the cereals are already done or very close to done, but canola still has some way to go. These are numbers as of September 2nd in Saskatchewan. You can see here that 42% of the canola was harvested, so still a big chunk to come in. And even over the last week or so since this survey was taken, a lot has been delivered, placing a lot of pressure into the marketplace. Here we have the Alberta. No, this is the Manitoba crop report here that I put behind the Saskatchewan for some reason. The Manitoba is the highest here as far as provincially going at 76%, but that still means that there's canola coming in Manitoba as well. So still harvest pressure in Manitoba. And then here is Alberta's, and that one is showing that 55, almost 56% was completed as of the 23rd of September. So still lots of harvest to go here, and that's still pressuring prices. Now, the USDA wasn't so kind to wheat yesterday. The small grain summary from Tuesday showed that all wheat production was at 1.984 billion bushels, which was 63 million bushels larger compared to the average trade guess of 1.921 and 57 million bushels above the August crop production report. Winter wheat production was pegged at 1.4 roughly, which is 50 million bushels larger than expected, with HRW at 804 million and SRW at 353 million bushels. Even spring wheat was pegged at 497 million bushels higher. So these were bearish numbers for wheat, and you can see that reflected here. Here is December HRW. It probably was the most affected, at least from a percentage standpoint, driving the nearby price down to 490 or even below 490. Chicago saw some similar trade yesterday, although it didn't break or didn't close below support yesterday. It did trade below support yesterday, but finished the day above. That may be a bit of a positive sign. Although it still looks pretty precarious here. Spring wheat, of course, was kind of holding on to this support here through the USDA and everything. And today it kind of fell apart and closed below support. Also because there's still the pressures of harvest here in the north of the 49th parallel, let's say, for the spring wheat crop. All right, let's talk about corn here now. Now, we didn't get to talk about corn yesterday after the USDA report. This is a graphic put together by Zaner Ag Hedge, done by Karen Braun. As you can see, the corn overshot the estimates by 207 million bushels. Now, just to put that in perspective for us Canadians, that's about 5.8 million tons that they overshot, that USDA had been underestimating, and that analysts also underestimated by that much as well. So it was a big surprise on the corn stocks. which will have an effect on the next USDA or the next S&D for corn as well. As you can see, that reacted to the downside pretty heavily, breaking kind of below some of that support that we saw. I don't know. There's a bunch of minor support here, so it's kind of hard to tell. But we did break below the 50-day moving average here as well today. But it on both of these days, yesterday and today, it did manage to stay above that. I do think that President Trump, including all row crops in that message that he sent out earlier today, probably helped propel corn up a little bit too. Corn, for all intents and purposes, should have continued its move lower based on that surprise yesterday. But overall, a rising tide raises all boats kind of thing. And I think the market saw the Trump message as very positive. All right, that's all we have for you today. Thank you for joining us. We will see you again tomorrow.